Hello everyone, PS from PS Invest Plays here today. Since March 2020, McDonald's stock has risen over 66%. Even though Q2 2021 earnings smashed estimates with double-digit comparable sales growth in the US, the investors only paid attention to the headwinds, and the stock shed 5%. Is this trend going to continue, or we can expect a higher price movement in the future? In this video, we will understand its business, its financials, its future outlook, review its charts using Elliot wave to see how we can make money. So stick around. I think you'll like what I have in store for you today. McDonald's, ticker MCD. McDonald's is an American fast food company founded in 1940 as a restaurant operated by Richard and Maurice McDonald in San Bernardino, California. McDonald's is the world's largest restaurant chain with over 39,000 locations in 119 countries. Due to its scale, it commands volume discounts in food and supply costs as well as advertising expenses. In turn, that serves to drive its net profit margin, currently near 25%. In order to drive future growth, McDonald's is focused on the 3 Ds: delivery, digital, and drive-thrus. McDonald's is adapting to evolving customer preferences with 65% of global stores providing drive-thru experience and 80% of stores offering home delivery. It is important to note that the average delivery order is about twice the size of an in-restaurant order. In some respects, McDonald's digital programs meld with delivery services. In 2020, 20% of the firm's orders came through digital channels. In Q1 2021, $1.5 billion in orders were generated through mobile apps, kiosks, or some other delivery service. McDonald's now has the most downloaded quick service restaurant or QSR app in the US. In Q2 2021, digital sales in the company's top 6 markets increased 70% to $8 billion. McDonald's is investing heavily in AI, artificial intelligence, and debuted My McDonald's rewards program to boost profits. For AI, it purchased Dynamic Yield that specializes in personalization and decision logic technology. Put in layman terms, it is used to maximize the productivity of McDonald's drive-thru menu boards. Although it is still in its infancy, McDonald's is running a pilot program involving 10 stores that uses artificial intelligence to take drive-thru orders. A company known as Apprente was acquired in 2019 with technology capable of analyzing and engaging in multilingual, multi-accented, and multi-item conversational ordering. Currently in use in 10 restaurants, Apprente is 85% accurate and can take 80% of orders. A recent initiative that syncs to some degree with the firm's digital offerings is the recently launched My McDonald's Rewards program. Available in the McDonald's app, those new to the program will receive an initial 1,500 points followed by 100 points for every dollar spent. Everything considered, it appears as if McDonald's management is pursuing a variety of initiatives to drive growth, and more than one is gaining traction. In Q2 2021, released in August 2021, it's hard to find faults in the results. In Q2 2021 earnings released in August 2021, it's hard to find fault in the results. Comparable store sales soared 41%. Now, one might think that that was due to the weak comps related to last year. Management provided the figures on a 2-year basis. From that perspective, sales were up 15% in the US and 7% globally. In the US, comps climbed 25.9%, while France and the UK recorded a 75% increase. Overall, same-store sales grew 40% and the comps in developed markets rose 32%. Revenue jumped 57% to $5.9 billion. Operating income was 280% higher at $2.7 billion, and operating margin increased to 45.7% from the comparable quarter's 25.5%. In the Q2 2021 earnings call, few headwinds that spooked market, but I think the market reaction was overblown as all of these headwinds are transitory and experienced by the entire industry. A company as strong as McDonald's should be able to handle them and come out ahead. The first headwind that was discussed was that there is considerable pressure for McDonald's to raise the wages of entry-level employees. This is manifested in societal and political terms as well as through a severe shortage of workers. Among independent restaurant owners, 74% say it's more difficult to staff positions than before the pandemic struck. McDonald's spoke of both wage inflation concerns during the most recent earnings call. In fact, there are franchises that are cutting operating hours due to staff shortages. A second issue that relates to restaurant supply chains, Morningstar estimates that a 7% to 9% increase in the cost of beef would result in a penny loss in quarterly EPS. Last, but perhaps not least, is the fact that many of McDonald's competitors that were operating at reduced capacity are beginning to reopen. Unlike many QSR restaurants, casual diners generally lacked drive-through operations. The possibility exists that development could weigh on McDonald's going forward. If you like this video, please don't forget to subscribe, hit the like button. Also, don't forget to hit the notification bell icon so you are notified when I upload a new video. Now, looking at the financials for McDonald's, revenue, gross profit, EBITDA, net income, earnings per share, EPS are excellent. McDonald's dividend for its common shares now stands at $1.29 per share quarterly, or $5.16 per year. At its current price, that amounts to a cash return of 2.16%. To put the payout into perspective, the average dividend yield for the S&P 500 is 1.3%. McDonald's has been paying dividends since 1968 and is also increasing them yearly. Even though Q2 2021 earnings smashed estimates with double-digit comparable sales growth in the US, the investors only paid attention to the headwinds which are transitory and experienced by the industry as a whole. As the economy reopens, these headwinds should subside. This points to an investment that should provide reasonable returns over the long haul. This is also indicative in the charts, where I see the stock price to increase considerably in the next 3 to 5 years. Now let's look at the chart for McDonald's. The bull wave that started for McDonald's way back in 1981 is still not over. It has completed its first 4 waves and now it is in its final wave up, which is wave 5. If we look deeper in this wave 5, we can clearly see that the first 2 waves are completed, and right now McDonald's is in its strongest bull wave, which is wave 3. You can expect the price to peak in this wave at around $375.73, which means a profit of 56% from today's stock price. At this price point, I expect a healthy pullback, bringing the stock price down to $289.31. From this price point, I expect the final leg up, which is wave 5, should commence, taking the price of McDonald's stock to $428.91. From today's closing price, that means a profit of 80% in the next 3 to 5 years. Now let's summarize. The current stock price for McDonald's is very attractive. It offers an excellent entry point. In the long term, I expect McDonald's stock price to reach $428.91, which translates into an 80% profit if you buy now. And the icing on the cake is the dividend, which it pays quarterly. Quarterly, it pays $1.29 per share quarterly, or $5.16 per year. What do you think of this analysis? Please leave me a comment and let me know. As always, don't forget to subscribe, hit the like button, and don't forget to hit the notification bell icon so that you're notified when I upload a new video. Until then, bye-bye.